Okay, ladies and gentlemen, I'm going to try and do this as quick as I can. Tonight, we're going to be talking about a specific candlestick structure that occurs within the hybrid system. And it's all about the red candle, green candle formation. It's consistent with reversals, okay? However, there is a little bit of a criteria that you need to identify before you can assume that this strategy right here, or this candlestick formation, is going to create the reversal. So let's break it all down so you guys understand what to look out for. And let me just say, yes, we're going to be talking in hindsight, but by the time we're done with this video, you'll know exactly what to look for and be in a position to prepare yourself for what is about to occur. Remember, we're not here to predict. We are here to react. So let's get with the program. Inside this strategy are two candlesticks. The first one has to be a red vector candle. You must wait for the candlestick to close. The second candlestick is going to reveal to you if there is intention to mark price back up. And it all depends on you waiting for that candlestick to close. So you have to wait for two candlesticks to finish before this formation is going to give you the idea of what we are looking for, which is a reversal. Let's go to the chart so you can identify what I'm talking about. So to help you understand what you're looking for, here is an example right here on the NASDAQ. You got this red candle, green candle formation. What it usually implies is there's going to be a reversal. So what you're effectively looking for is at the close of this green vector candle, you are assuming that whatever the intention was of this green vector is to continue in the opposing direction. Find another candlestick. Here's another one. But this one's a blue vector candle. But you've got the red vector candle, blue vector candle. And it always ends up becoming a reversal, okay? Keep on going back in the charts. You've got a red candle, green candle formation. Ends up seeing a reversal to the upside. Keep going. We've got this one here, which is a big wick. Okay, that's a little bit of a volatile move, so let's just give that a skip. But you can see here, look at that one. Red candle, green candle formation leads to another move to the upside and even a continued move even further, okay? Another example, right here, red candle, green candle formation, shift out to the upside, okay? Now you've got another one, stopping volume candle, green candle, shift out to the upside, okay? We keep going, we keep on going, we find it. Here we go, red candle, blue vector candle, shift out to the upside. Now there's a bit of information that you need to have in the back of your mind to understand if there is a strong possibility that when you see these two candlesticks, is there going to be a reversal? Remember, the red vector candle is what? It's a buying candle. And that means that you understand that when the bids are being hit, or in other words, when the big market players are looking to buy as prices are dropping, there is an intention later on in the future that they're going to want to offer out at a higher price, which effectively does create the red vector and then the green vector candle. What you've got to try and establish is the green vector candle closing strongly enough to suggest that the guys that have been bidding or marking prices lower are effectively showing their strength by wanting to bring price back up again. Now, this does involve having a little bit of an understanding between the bid and the ask, but we're not going to dive into that. This is just so that you know what to identify when you're going in the charts and you do see a big red vector candle. If you see a green vector candle appearing straight after, then you can make the assumption that there is a potential reversal getting ready to unfold. Here is a little checklist that you need to go by in order to understand if you are actually going to see a reversal once you see these two candlesticks form. The first thing, you must wait for the red candle and the green candle formation to get triggered. That means you're waiting for two candlestick closes. Two candle closes, okay? Then, once you've done that, identify where you are in the charts. Have you witnessed price been going down for quite some time? Or have you seen price make a big move to the downside and swept a previous session low, or an Asian session low, or a previous New York low, a key area of support? Whatever zone it is that you see the green vector, red vector, green vector candle forming, that's usually going to be the clue in terms of the environment that the reversal is more than likely going to occur. Okay, so look at the environment. Okay, environment, however you spell that. Okay, now the third aspect to it is this. Visually, if you see price trailing downwards, 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 you know that you've seen price moving away from key moving averages, okay? So there's going to be an instance where you're going to assume that there's going to be a reversion back to the mean, okay? So once you've been seeing price dropping, 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 okay, then you see the red vector candle form, and then the next candle creates the green vector candle. If price, once the green vector or the second candlestick forms after the red vector, and it shoots straight back up and you can see it actually moving at speed, that's going to be the first clue, because the green vector is not a green vector straight away. It becomes one, okay? So once you can identify that the second candle after the red vector, you start seeing it moving really fast, then you are in an anticipation that the candlestick that formed after the red vector is going to turn into a green vector. So you must wait for the two candlesticks to form. It's so important. Otherwise, you could end up waiting for this candlestick and think, oh, it's actually going to start working in my favor. And then it doesn't turn into a green vector. And then it just continues and trades lower. So to finalize, the first thing you want to do is make sure you're on the 1 hour time frame. Make sure you're focusing on that. 2, have you seen price making a move to the downside? If so, can you identify where the moving averages are? Okay? Has price moved away? Is there a gap between the moving averages and price? 3rd, you must wait for 2 candles to close. You have to wait for it because there's no point in trading the formation if it's not there. So you have to wait for a big red vector candle to occur. That will then be followed by another candlestick that must become a green vector. It can become a blue vector candle, but as long as it's a green or a blue vector, it then completes the formation. Because if you do take a trade before it becomes a green vector, you run the risk of witnessing price coming up, recovering some of the midpoint of the vector candle, and then dropping back down. The idea is that the green vector candle, in terms of a traffic light, the red vector says, stop, wait, green vector says, go. Now, depending on how this candlestick closes, is going to determine your entry point. The sweet spot, which is the 4th point on the entry, is this. Once you have got the red vector candle, okay, and then the green vector candle comes into play, look at where you are. So I'm going to make that green vector candle. Look at where you are relative to the midpoint of the red vector candle. If the green vector closes above the midpoint of the red vector candle, you are improving the probability that price is going to continue on the next candle to the upside. Because if they can close above the midpoint of the vector, it means that the guys who were previously buying inside of this range, okay, are no longer interested in marking prices lower from that range. That means they are only interested in offering higher, because by the time this candlestick formed, assuming that halfway through the candlestick, that's where the guys were buying aggressively, which is what forms the red vector candle, because price action started to pick up and it started to go at speed. And then there was an imbalance inside of that zone, which is effectively where the guys were being sold to. In other words, the sellers came in aggressively and the bids picked up those orders. Okay. So as long as the green vector candle can close above the midpoint of the red vector candle, you are improving the odds that the next candle after the green vector, once the formation is complete, is going to continue to move in the direction of the upside. So ideally, you're looking for the candlestick of the green vector to close above the midpoint. You place your entry at the close of that green vector candle. As long as it's above the midpoint, then you're happy days to assume that the next candle is going to continue to the upside. Okay? One important factor. Once you have the red vector candle, then you've got the green vector candle. Those of you who are a little bit more conservative would then say, but Tino, if the red vector candle gets recovered by the green vector, but what about the green vector candle getting recovered? This is where you fine tune your entry. if the next candlestick comes into play, so let's make the assumption that you took a long at the close of that green vector, okay? If the next candlestick comes into play and it does work its way down into this area here and creates a wick, so price comes into the green vector zone and then reverses back up and then closes higher, ladies and gentlemen, you have just had the lock. They've effectively locked this area of liquidity. They've locked that zone, which effectively means that the bids have gained control, which means that they do favor to reverse price to the upside. This is very important because most of the time you do see green vector candles after they form this structure, they do end up getting recovered before they end up going higher, okay? So just take that into consideration when you are using this system. Now listen, obviously you have to go back in the charts and try and identify what you're looking for. Here's an example. So we have got now this red candle, green candle formation. If you had taken a long on the close of this green vector candle here, you would have then seen price come back down, shake you out, get scared, and then think, all right, I'm out of the trade. But no, you would have already had in the back of your mind that this candlestick has recovered the green vector and moved away from it, okay? It ended up moving away. If you see price go into the green vector but come straight back up towards the top side of that candlestick, chances are it's going to continue away from that point. Go and find another one. Here's this. Look at this one. Brilliant. Red candle, blue candle. Look what this candlestick does. It opens, comes down, recovers the whole thing, but then reverses back up. It's not always going to be an easy ride, but at least you now know what to anticipate. So you're going to now manage and adjust your risk to factor that possibility in. Sometimes they don't even need to recover the vector. Look at this one. Red candle, green candle formation. Well, that candle just continued higher. Okay? Go again. Let's find another example. Let's go over to Bitcoin to make it so it's not just biased to NASDAQ. So let's just find another structure right here. Wait there. I'm sure I've got one over here with Bitcoin. Oh, look at Bitcoin right now. Look at this one. Red candle, green candle. You would have taken your entry and price has then effectively come back down to test it. So Bitcoin's doing it in real time. Now, when you collate the idea of what's going on in the marketplace, okay, if the NASDAQ's moving up right now, then the assumption is that Bitcoin's going to start moving up. So Bitcoin could effectively be creating that little structure right now where it retests the vector candle to then try and continue back up. Let's assume and hope that that's exactly what happens by the time you get this video. Well, by the time you get it, let's just hope it works. Because if it doesn't, well, it was just probably a bad example, but you get the idea. The only thing that you can do right now, ladies and gentlemen, is to go back in the charts and try and find this structure and create as many scenarios as you can where you do identify a red candle and a green candle, okay? You've got to go back because your goal now that I've told you what you need to do with this, okay? You have to wait for those two candlesticks to form, okay? Once you see them form, happy days, you're free to trade. However, going back in the charts and identifying these two candlesticks and what price does afterwards, you are effectively training your eyes or training your muscle memory in your mind to know that the various ways that this structure forms most of the time leads to a move to the upside or implies reversal up. You've got to go back and try and find as many of these in the charts. And I promise you, if you do this properly, you'll then witness this structure forming and you'll know and have a good idea of what to expect because you went back in the charts and trained your eyes to identify what happens after you see it. Because if you know and see, if you've gone back in the charts and you've seen many, many times what happens after you usually see this, the probability says that you are going to take a trade when you see this. And if everything aligns up based on what I've explained, you're more than likely going to be in the right move to favor a reversal to the upside. I hope that makes sense, ladies and gentlemen. I'm trying to keep this video short and sweet for you. Mad love and respect, and I'll be tuning into you all tomorrow. Peace.